Hi, welcome to Neppy Invests. Today I'll be talking about a company that's in my long-term portfolio, and in that portfolio I aim to keep these companies or hold these companies for 5, 10, hopefully even 20, 30 years, because if I can hold them for that long, the story hasn't changed and more than likely the value of the company has increased significantly. So the company today I'll be looking at is EOS, Electro Optic Systems. And I have mentioned here they are the ASX defensive stock, and defensive you can read that two ways, and I'll get into that in a second. So what do they do? Just a bit of an overview first. So I've mentioned here they are the largest defensive exporter in the southern hemisphere, hence why they are the defensive stock. And the main reason I did get into this company is they are Australia's largest aerospace entity. Entity includes the government, if you can believe that. So they are growing their revenues quite quickly right now, and I expect those revenues to increase substantially over the next 5 years. You just see the sales pipeline and the order backlog there is quite high, and they are expanding around the world. So exciting company here, just with a brief overview. So they have three segments: the defense segment, of course, and the space and communication segment. So those space and communication segment is why I'm more into this company right now. And hopefully as we go through the next 5, 10, 20 years or so, we'll start to see companies who are involved in especially the space segment, and they're going to be incorporating communications within that too. So space and communications, you can sort of view that as being integrated together, and that's as very much going to be a growth sector over the next 5 to 20 years. And more than likely, any company involved within those segments will see quite good growth. But first, I'll just talk about their defense segment. So remote weapon systems just means you have the controller of the weapons will be within the vehicle itself. So they're going to be safely within their vehicle. So traditionally you have the gunner on top of the vehicle, just like this vehicle here, and he's exposed or she's exposed and probably will be potentially easily taken down. Now with this remote controlled weapon, you have the person controlling the weapon in the vehicle. So they get a lot of revenue from this EOS. It's the main revenue driver at the moment. But they are starting to move into this field, the counter-drone area. So drones are becoming more and more a problem around the world. We've already seen a few attacks in strategic positions or spots. And so they're aiming to protect valuable assets against malicious and misbehaving threats. So malicious threats is easily understood there. So acts of terrorism, and you're also looking at drug smuggling, industrial sabotage, also even potentially looking at paparazzi, and then people like me who might be driving or having their drone going to areas where that should be going. Maybe I'm getting my meal delivered by drone in the future, and it's going for some reason going to a spot it shouldn't be, and they'll shoot down my meal. So that's just a thought that would happen. Anyone, any delivery service person who has or company has a drone delivering stuff would know where they can't fly the drone. But this is a good defensive play here against a growing threat around the world. This is something I'm a little bit more excited about in the defense area, because I do believe automation is the future of the world. Most people don't want to hear that, but it's an undoubted future that we're going to have to deal with, adapt to. And here we have an example of that. So a remotely operated combat vehicle, and that's going to become more and more common. And they have put in through a few tenders around the world in regards to the ROCV. So looking forward to see where that future lies in the coming years. Now let's get to the communications segment. So they have made a few strategic acquisitions that are really going to help them help them use or take advantage of EOS optical technology over the next, say, 10 years, I want to say. So the first acquisition was EM Solutions. This is more of a business acquisition. So EM Solutions, they sort of provide the on-the-move satellite products that enable the customers to get high-speed communications from anywhere in the world. And that's going to help the communications, satellite communications in the future. So this was very much a strategic acquisition, and add that to the next acquisition here from Odyssey or Daisy Corporation, which was an asset acquisition along with the other acquisition they made, which was Colonier. So Daisy were granted a spectrum license by the FCC 2 years ago, and that spectrum license authorized that company to create some mid-Earth orbit satellites by the year 2024. So that spectrum license requires Daisy, or now it's EOS, to launch some MEO satellite constellations by June 2024. So what EOS is going to do initially, that satellite constellation will take advantage of microwave technology initially, and then by 2027 it's going to take advantage of EOS optical technology, and that should improve that sort of communications, because optical communications is ideal or better than what we have now. That's the idea behind it. So these strategic acquisitions will help, when you add it to the EOS optical technology, will help drive EOS into a field that's going to really take advantage of the technology they have, and that should, in theory, add a lot of value to the company. So let's get to the space. So space segments, they have a few here. So initially the SDA, so the SDA is the Space Domain Awareness, and that's just a sort of a knowledge or comprehensive knowledge of location and nature of objects in the orbit, Australia or Earth's orbit, and that uses laser tracking. So a lot of this technology uses laser tracking. See the space debris management, this is from their website, this picture uses lasers there too. So that space debris management is just making sure or avoiding collisions of all this space debris in space, which undoubtedly will increase over the next decades or so. The amount of debris in space will increase quite a bit in Earth's orbit. So that's sort of what I've got here. Right at the bottom there, I've just mentioned risk pipeline, and then they've got an unrisked pipeline there. So I'm not sure what the difference between the risk and the unrisked is, but they do expect to be profitable in the coming years. And then on the right here, something I found quite impressive is their laser tracking is effective for 5 centimeter objects that is traveling at 10 kilometers per second at a range of 5,000 kilometers. Found that very impressive. Maybe someone out there watching this doesn't find that impressive at all. And if you don't find that impressive, leave a comment and explain why. I like to learn why. But even their space domain awareness is, we're seeing the government funding there of $2 billion in the future. So quite a lot of money going into that space domain awareness, which I think is quite important. Their financials, now they've taken a little bit of a hit in the previous half year, just because their financial reporting is half year displaced from most Australian companies. So they're more January to December instead of the usual July to June, which most Australian companies do that. And the last half year, even though they've increased revenue, you can just see the EBIT has gone down to -18. There have been a few orders that have been delayed by 6 months or so. So all those orders, it hasn't been cancelled or anything, all those orders will go into the next 6 months or next year or so. So they have reconfirmed their full year 2020 guidance of EBIT of 20 to 30 million. So that's a substantial improvement from the -18 they've seen the first year. So you can see the second half of the year, they're expecting between 40 and $50 million in EBIT. Undoubtedly, we're going to see that increase over the coming years. So most of the revenue right now is in the defence, but we're seeing with the acquisition of EM Solutions that the communications has gone up to 8.1, because that's sort of a new business. Not a lot of revenue in space, but they do expect that to be profitable in the next year. Let's go to the charts. So the initial daily 1 year chart, nothing too exciting on this, especially the last 4 or 5 months. We've seen just a backward and forth sort of trading between a range, and that range, you could say maybe it's getting smaller. Moving averages are, not very close together, which suggests there's not a lot of volatility. So, and that sort of range, which was trading between about $7 and $4.50, now going to between about $5 and $6 over the last month or two. Got to a high of above $10 just before COVID-19, and then with COVID-19 we saw the share price drop to 3, just like many other companies. We've seen a bit of an increase in volume over the last 6 or 7 months. Not sure exactly why that is. They have had a couple of capital raisings just because of the amount of projects they're doing. They need a lot of money to fund those projects. More interesting for me, just because this is a long-term hold, so usually the daily chart is more of just noise. I don't really care about that sideways, little bit of volatility, not much. I don't really care about that. But when I look at this sort of chart makes more sense to me, is more important. The weekly 5 years, looking back at 5 years, and the next 5 years is going to be important. So a good uptrend here. So from October 2015 all the way to start of January 2019, a good, solid, slow uptrend. So a much more quicker uptrend from start of 2019 into start of 2020. So only a year, went from about $2.50 all the way up to $10. So a good full bagger there. And I know I was a holder during that period, so it was very exciting. Took a little bit off the top near the $10. I think it was a little bit less than that. I think I took some holdings off at $9. And then we saw a drastic decrease in price during COVID-19. And now it's just sort of trading sideways, but still above the long-term moving average, which is the most important. Still suggesting there is still some good uptrend in this company. And right at the bottom there, you can see how much the volume has increased in the past 7 or 8 months. That's quite a lot. So still bullish on this company, even in the short term. I don't really care about that. It's more the long-term thesis, this playing out. And more than likely, I believe this company will be much higher valued in 5, 10, 20 years. The ultimate hope for a company like EOS, and even though I'm saying this is the ultimate hope, doesn't necessarily mean EOS will fulfill this hope. So the ultimate hope, this will be a 100 bagger sometime in the future. So at least one of the companies I have in my long-term portfolio, I hope will become a 100 bagger. Otherwise, there's no point playing this game. And one day in the future, I'll tell you the difference between my long-term portfolio and my other holding or portfolio, which is more of a momentum trading portfolio, which could be very short-term or even long-term. That's all for today. If you want to leave any comments, leave below. Subscribe to my channel to get all the latest information and latest stocks I'm buying. Otherwise, I'm not a financial planner or financial advisor. So if you do need financial advice from a professional, make sure you seek one out. That's all for today. Bye.